Hey guys, Mike here. So we got more data that the market loved, right? Yields dropping, economy, weakening, if you want to call it that. But there's definitely some sectors, as you can see, that big money is like, you know what? We're not going there right now. And they're just pushing and pushing the Qs and the SPY and the stocks within that. And I'll show you exactly what I'm talking about. You can see the clear rotation. Is that going to stop? That's what we're going to find out, okay? So we're going to look at that. We'll look at the data that came out and very in detail. When you talk about this jobs market and people tell you, man, the jobs market is just going to heck in a handbasket and oh my God, people are losing jobs. I will show you something that might change your mind. I'm not saying we're not going to get there. But again, on this channel, we keep things in perspective and we just kind of tell like it is, all right, whether people like it or not. Then we're going to really touch on the semiconductor stocks, all right? There was two that was going off the wall. I'm going to tell you, I know a lot of people out here, I'm talking about, well, we're going to short this stock. And I'm like, hold on, do what you want to do. But let me just tell you something real quick before you do that, because there's a whole lot of people been trying to short Nvidia. Since it did its split, there's a lot of people sold out of Nvidia before it did its split and all this stuff. So let's talk about that for a minute, please. And then we'll touch on Tesla as well, because obviously the whole pay package thing, and Elon put a tweet out and they went crazy and then sold down and all this crazy mess. But we'll talk about that one as well. But when you're looking at this data we're talking about, so PPI came in lower than expected, okay, so that's a good thing. So we got CPI coming down. Whether we believe the numbers or not, don't matter, right? It don't matter if they're cooking the books, don't matter. It depends on, all we care about is what the market thinks, right? And so this came down, that was a good thing, okay? Again, whether it's cooked, I don't know. Now, the jobs data, as you can see, unemployment claims came in higher than expected. This is what the Fed wants to see, okay? Initial jobless claims came in higher than expected, but you can see like continuous jobless claims have finally really turned, right? Like if this was a stock, you would say what? This is an uptrend, right? And the initial stuff, you wouldn't say it's an uptrend. You would say it's coming up to resistance, going to maybe break through, and then we'll see what happens. I don't know if they're trying to look over in the middle there. We got this huge surge in, from March to June of 2023, if that's what they want. But when you look at this, this is continuous jobless claims right here, 4-week average, right? When you look, going back to 2017, we ain't even got back to that level yet. Now, 2013 was even higher, okay? So we're getting there. We're almost there. And so, again, on this thing, what makes this kind of cool is an interactive chart. So you can literally go here and change the date and stuff and look at this. So I pulled up 2012 because that's where we recovered after when we looked at it. After the 2008 crash, I think that's where we fully recovered the jobs and stuff. And you see it kind of coming down, right? When you go back, this is what you're looking for if you're looking for a broken economy, okay? To go up, and you can see the numbers. We're not even like, there's nothing like that, but it goes up pretty fast. When it starts to accelerate, it's like anything else. Same as a stock. When it breaks out and they go to these crazy runs, right? And we'll go back to the dot-com bubble, and you can see two of them because the Great Financial Crisis is a little different. And you can see right there, right? It goes from 287,000 to the peak of it was around 480,000. Okay, so we're nowhere even close to that kind of stuff. But again, so we'll see if it ramps up or not. There you go from 325,000 to 659. So usually you're doubling. Okay, and currently we're sitting at 223,000. And so if we do go into recession and continue to slow down with these rates, we're looking at 450, 460, somewhere in there. And so again, make sure you understand when I say things that have been broken, look at this mess. We went up to over 5 million jobs lost. Look at that. You never see that on this chart. Maybe the Great Depression, if it went back that far. But that's why the business cycle was broken. That's why employment was broken. All this crazy mess, that is a problem. Okay, so just wanted to point that out to you in case you forgot about it. Now, this rotation stuff, you saw, Qs are green, SPY finally goes green, all this stuff, they're setting all-time new highs. But you can clearly see a divergence, right? The Dow and the Qs were going in the same direction, and boy, come mid-May, they said, heck no. It's all about tech, right? And we're getting rid of the Dow. Why? Because Dow stocks, or stocks in the Dow, are very sensitive to rates, all right, and these yields and stuff. So is IWM, which we're going to pull up. So is transportation stocks, right, which is, of course, in the Dow. And so, but that, that thing, it looks like it's going parabolic, doesn't it? But when you pull up other stuff, IWC is micro caps. They're smaller than the, obviously, IWM, right? So they're even more rate sensitive. You pull up DGI, IWC, IWM, and they look at the SPY and the Qs. They're like, see you later, losers, right? And then boom, the rest of them are heading south. And so, again, the breadth sucks. I'm going to tell you when the breadth changes on the SPY and the QQQ. It has not done that at all. The equal weight ETFs were red today. All right, and so again, even when you pull up the equal weight ETFs, here's the QQEW, and then you can see clearly that one's turned up as well. So the QQEW is turned up, not greatly, right, but it's better when you compare it to the RSP, which is the equal weight ETF for the SPY. That thing is doing nothing. Let me get rid of some of these things. You can actually see what I'm talking about here. But that thing is doing nothing but trading sideways. We'll look at it in just a second. But you can see with the QQEW, it was heading down, right? But at least it's trying. It's setting a newer high, or a higher high, excuse me, right there, as you can see. But again, you pull up the RSP, and the RSP is doing nothing but going sideways right now, because the RSP has what? Healthcare, utilities. What else we got going on? It's not doing very well in there. You got industrials, you got oil, which is energy, those kind of things. So certain sectors that don't do well because of high rates, high yields, all that kind of stuff. And you can see right there, not only going sideways, it's actually going down. It's setting lower highs versus the QQEW is setting higher highs. And so we'll see if that turns up, but it's pretty plain to see where big money and big purchases aren't going currently. All right. And when you look at IWM, like this thing right here, that trend line right there, that's the bottom line. That's the line in the sand right there. And I told you, if we break 200 and continue to fall, it's going to put that trend line in perspective, which give it a fourth touch. If that trend line breaks, then oh boy, okay, that is going to be a complete disaster. And it's just weird to me that, this data is coming in good, yields are dropping, rate cut prospects are coming back up, but they're still not going into IWM right now. And you see it gave back all the gains and then some from yesterday's CPI pump. I mean, all of them, right? And so, which is just kind of nuts in a way, but it's just what's happening in this rotation right now. And you can see that zone, that's going to be a zone of support right there. It needs to hold. I'm not saying it's going to break. I'm just telling you it needs to hold, right? So around 198-ish, 1 to 200, somewhere in there. And then if that trend line right there we talked about breaks, you can be expecting this right here between 178 and 181. I'm not saying that's going to happen. I'm saying be prepared, all right? And a lot of people will be crying and saying, oh my goodness, that did not go well right there with these small caps, but they're just, for whatever reason, not rotating into them. I know a lot of the companies are garbage. I get that, but again, you don't need rate cuts to have this thing move. It's more of a trading vehicle. Okay. Now going into obviously semiconductors, AVGO reported, that's Broadcom, had killer earnings, huge gap up, 15% move up. When you look at that, is that out of character? Abso-freaking-lutely, it's out of character, right? This thing has moved up very well, right? Just bouncing off the moving averages and bouncing and bouncing and bouncing and giving plenty of pullbacks, unlike some others, which we'll look at. So plenty of time. So it's moved up structurally very well. Respect the moving averages. Now it's way above, especially the 200, way above those moving averages. Okay, but I understand. I know people look. They were jumping in shorts today. They're gonna try to jump in shorts, and that's fine. Do what you want to do. Maybe it just plummets because it's not Nvidia and these others and stuff. But I'll say this: don't forget the announcement they made, which made this thing really pump. And we're getting the earnings, which weren't bad at all either. But they announced the stock split, and we've seen it how many times now. And what we talk about, if the market is going up and they announce a stock split on top of good earnings, especially, it's rocket fuel. Okay, it is rocket fuel, and normally you'll see a continued run if the market holds. That's the key. But when we go into our Discord here and we look, just how I like to look at earnings right here, this income statement, theirs were not bad at all. They were really good, man. I mean, revenue up 42% year over year. Right, you see the margins, I think it's 62%, 24%, right, 17% across. But you look over at where they got it from, infrastructure software, 175% increase year over year. Semiconductor solutions, plus 6%, so that's pennies, right? But that infrastructure right there, software, that just exploded. I think they were saying they can't find enough chips. Business is awesome. Again, we'll see how that works out. And I know this ain't Nvidia, so it could just plummet tomorrow, right? But because they announced that stock split, and most of the time you see it right now with Chipotle, right? That thing's setting an all-time new high. Everybody thought it was going to just dive after they announced that stock split because it's so far out. Still going up after all this time, right? So be careful is all I'm saying. Now, SMCI is another one, and this is how this one moves, right? You get this downward channel, falling wedge, whatever you want to put into it, right? But a trend line where it's bouncing, resistance, rejection, and it just explodes, okay? And so that was the day. I think AVGO is really what basically, made this happen. But you can see it repeatedly happening over and over throughout this stock's history right here. Doesn't mean it's going to continue at all. I'm just saying when you look at it, there's a trend line here I want you to look at. And that trend line is right there. You see it? That's been support, 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 fell through, plummeted. So around anywhere from $950 to $1,000, depending on when it would hit it, that would definitely be resistance. Assuming it gets through this area we're in right now. This area goes back. It has been support. It has been resistance. So that's exactly where it got stopped in its tracks today. Again, now when you look at this one, if you're trying to pull up any kind of technical stuff by saying, well, does it respect its moving averages? It respects the 100. The rest of them it don't give a crap about, to be honest with you. You can see it right there, bouncing multiple times off the 100 when it came down, right? 3 different times, actually. Then the 100 became resistance. Well, now it closed above the 100 moving average. Now the 50 needs to curve back up. But this one is such an explosive stock when it moves. It's just insane, right? So the moving averages can't even really keep up with it. But you can see clearly, it does respect this 100 moving average. When you go to the MACD, it had a bullish MACD cross today. If it crosses that 0 line, that's going to be jet fuel. I'm just telling you right now, it's going to be freaking jet fuel. So watch out for that. It was a big move today. Look for it to digest, all that good stuff. The other thing that was happening on this one was the call sweeps are coming in by the millions, all right? And of course, what do we know? What's one of the things that move markets, right? Those order flows, okay? So we're just piling in. These aren't long dated. 614, 621, 75, right? So not very long dated at all. Anywhere from 820 to 945, right? So that's where they were, piling in at. Now, Nvidia, of course, continues to move, right? Keeps setting all-time new highs, seem like every single day right here. And you can see people want to know where is it going to stop at. Well, if you pull up, your fibs, I think pretty much 135 to 140 is a good target. But if you're going higher than that, you go 155, tops 160. I've heard that one called out. That's that big fib at the very top up there. Again, you see where I like the buy-ins if it happens to come down and stuff. But just look at this thing. When it comes to technicals, just look at that. You're going to be hard-pressed to find a chart like that anywhere. Anywhere. And again, we all know the market can remain irrational longer than you can stay liquid. But, the crazier it goes up, the harder it falls eventually. And it may be years from now when this happens. But you can pull up charts from any other time. And when it gets hit, it gets hit. But as long as this market is raging on, it's raging on. Right now, I want to show you some stuff. Pause the video here. Copy some of these names down right here. I want you to create, as a matter of fact, do what you want to do. But I know what I have done in the past. Create yourself a watch list. If you got TradingView, do it that way. Whatever you're doing here, write them down. And this actually is pretty cool. It actually breaks it down for you. And it's from this website named QUATR. You can follow them on Twitter as well. But I'll show you 2 different ones. Some have more names than the others. But it breaks it down in like what's design, what's electric design application, what's the equipment, right? Who's the raw materials? Who is the one selling the chips, right? Who's the one making the chips, okay? And so you see it broke down right here, right? And so you can look at the manufacturers, all kinds of stuff. And look at these names. Start pulling up the charts. Start pulling up the earnings, right? Get you a list because, again, it's like an ecosystem, okay? It's obvious that Wall Street's going to try to ride this thing out, and they could ride this thing out for the next, 2, 3, 4, 5 years, up to 10 years, but just figure out which one's the best, right? And that's what you're going to see because you're going to see rotations out of some of these into others. That's just the way it's going to be. Some of these are going to get bought up, by the way, as well. Here's another one with a boatload of names, so just more ideas for you. And again, you don't see just straight, semiconductors on here kind of stuff. You see Meta on there, right? You see different kind of names on here that are using this, that are coming up with things. So even for the AI ecosystem itself, you have a lot of different names. And you can just copy these down, look at them. Again, some of these will be takeover targets, okay? Because when some of these companies get so large and have so much cash and the growth starts to stall, what are they going to do? They're going to do what a lot of companies do. They're going to start buying other companies within that ecosystem, okay? So just, keep that in mind. But at least I want to show it to you. So that way you can get out there and looking, Googling, do whatever. Here it is. You can pause it, take a picture of it. If you're a member, this will be in the Discord. And I'll also send it out on Patreon for you guys so you have it first and foremost, okay? So just kind of keep that in mind. And lastly, we'll finish up with Tesla. As you can see, you got an inverse head and shoulders right here. We started to take off today. You see the target. Will it hit that? I don't know anything about that. I would just look at these trend lines right here to target. Now, again, last time I had an inverse head and shoulders, it almost made the target. I mean, it almost made it 300. Target around 322, I believe it was. So, it's a big move, big explosive move up. Again, all this depends on Elon's pay package and what else is going on, because, let's be real about this. If they ain't lowering rates, I can't imagine, people are piling in the cars right now, but maybe their numbers will go up. Who knows? And so it's not like a fundamental move. We're going to just start increasing all this and that and the other. Remember, the move in the first place is off robots and the auto taxi or whatever you're trying to call it. And I even read something today saying that might be delayed, right? They're supposed to do it August 8th, I believe, if not mistaken. And that might get pushed back. And if that gets pushed back, you can imagine what's going to happen to the stock. But again, I was actually surprised in after hours that the move wasn't higher, but I don't know. I don't know what to make of that one. We'll see what happens. But again, we'll see if this plays out or not. It was a huge move in after hours last night when he sent out a tweet saying things are getting approved. Ooh, his pay package. And I forgot, what was the other thing? Oh, yeah, moving from Delaware to Texas, as far as how they're incorporated, was another one. So, we'll see what happens. Let me know what you think down at the bottom and stuff. And again, pause, go back, pull up that stuff. If you're a member, it'll be there in the Discord, and I'll send it on Patreon for you so you have that, so you can start, making your list on which one of the AI stocks you're gonna call them that, infrastructure, the people that sell the chips, make the chips, all that stuff. You can make it all out and just kind of plan your way out. And so, especially because why? You want to plan for pullbacks, right? So you can look at those charts and set your levels, like I did on Nvidia, and say, this is where I'd like to, add. Okay, this is where I'd like to add to my position. I'm willing to do that, right? So that's what you got to be looking at, guys. So anyway, hope that helps you. Again, won't be a video tomorrow because it's Friday, but I'll put out Saturday's videos. Put any questions you have in the comments. Sunday's video to set us up as usual. Anyway, have a good one, guys, and I'll see you tomorrow.